Hey, welcome everybody to another eye opener. This is Market Wealth Daily's quick little video chats that we do with top traders here, and really excited to have Blane back with us. Blane, hope you had a great weekend. And wanted to kind of jump in here. A little bit of a wild ride here, getting tossed up and down. Want to get a sense of what you see that kind of setting up for us, and then want to follow up on the trade we talked about last Wednesday, and kind of dive into that, see how it's going. I'm guessing that the great record that you've had is intact. We'll let you dive in and take us through it all. But hey, man, thanks for being here. Really, really appreciate it.
Absolutely. Well, first off, yeah, thanks for having me, John. Really excited to be here on this Monday morning. Always love getting to sit down for these eye openers. So again, really appreciate you having me here. But yeah, no, entering into this week, coming off of last week, you and I, we had, really discussed this, really kind of warned people in advance that, hey, last week was, it's going to be jam-packed full of events, all market moving events, or at least had the potential to be. And a lot of them turned out to do exactly that. Wasn't all bad by any means. A lot of the earnings, the big earnings reports that were expected last week. By and large, all the major companies that had to report earnings last week, reported very positive results. They were reporting revenue beats, earnings beats. It was somewhat, the reactions to the, reports weren't necessarily good across the board. We saw a couple sell-offs related to them, but the earnings themselves were actually solid. Some of the trouble came in with guidance and things like that, but the actual results reported were solid. Some of the other things were, a little bit more muted. But the thing last week, John, this is no shocker. That really kind of got the market spooked was Friday's jobs report. Things were a little uneasy heading into it. We, really saw share prices, stocks sell off late day Thursday, kind of finishing to the lows, heading right into that. And then, that jobs report dropped on Friday. And, the July number, wasn't disastrous. Obviously, it missed to the downside. But it was just just kind of measly 73,000 jobs added. It was really, just not a whole lot, it wasn't that impressive. It was just like, okay, it was like, got a few jobs added, wasn't a negative number, but where the real trouble came in was the prior 2 months that it got revised significantly lower, erasing pretty much all of the jobs growth that had been counted in for those 2 months. So, that's really what got markets spooked, really heightened fears about the U.S. labor market and thus the U.S. economy, should that, be an early sign that, there really is some weakness starting to develop there. So that's really what got stock spooked last week, led to that big pull off, or pullback that we saw. So that's kind of what's going on. A lot of those things we said to be aware of, definitely was good to have those on your radar. And then, of course, last week, as you said, John, we talked about the DoorDash debit spread here in the call last Wednesday. All the technicals were kind of aligning just perfectly for that one. Really liked it. And that trade's working out. I don't have the exact market value or return of it. That is a little bit longer horizon trade. I believe it was a September 9th debit spread we looked at there. But I looked at DoorDash stock price just before we hopped on, and the stock's actually hitting new 52-week highs. Yet again this morning, it didn't participate really that much to the downside, along with the market and that sell-off last week. Just kind of continued chugging, higher, making higher highs and higher lows, and again printing a brand new 52-week high yet again this morning. So that stock is still looking really, really strong.
Yeah, that's great, man. I know I'm watching another trade here. I think I posted on our Telegram channel where it did get caught in a little bit of the meat grinder on Friday and dragged down, but has already kind of come back and is looking like it could go farther up from where it was before on last Thursday. So we're seeing this movement, and it's looking more of a blip than a reversal. And it looks like it's the breath that the market needed to take. There you go. That's what I wanted to see, and that's
Yep,
telling
yep.
us exactly that. It's like, hey, we're not in that oversold range or I'm sorry, overbought range anymore. We're kind of back into out of the stratosphere, right? So
Right back to
cool.
the
Well,
median.
yeah. So what's jumping out at you here?
Yeah, exactly. Well, just obviously got a big lift in markets today. The S&P's up, about 1.2%. The Nasdaq was up, I think, a little more than 1.5%. So a nice big lift, across the board in stocks today. Rising, bouncing off of that low from Friday. Of course, you can see on the chart clearly right here. Here's Thursday and Friday of last week. We're just talking about that sell-off, just in case you hadn't seen it on the chart. Of course, this is the S&P 500 chart as well. But seeing that big lift today, we're currently right near session highs, back up above 6,300 on the S&P. So that's all very encouraging. And we had been saying, quite consistently, John, too, that the S&P had been, really riding in overbought territory, making those new all-time highs kind of day after day after day for quite some time, and was really setting up for a pullback kind of like this. We had a kind of a mild pullback, a few weeks prior, didn't quite get down to that middle Keltner channel, continued to rally on from there. So kind of continued stretching that rubber band out a little bit. And so obviously got the bigger contraction last week, seeing the index, down across the board. But again, we on the short term RSI down here, I love looking at this as an oscillator right here, to determine whether overbought, oversold conditions. You can see that we very quickly, in just a matter of a few days, got down into deeply oversold territory with the RSI getting down to below 20 right here. So, we're certainly due for, a bit of a rebound and pop higher off of that. Again, I don't think that there's any significant trend change underway here for the market. All the trend lines are still intact. Despite last week's, ugly week in the market, we still have the long-term and medium-term trend lines still all intact. Indexes are trading above all of them. So that's a really, really good sign. It's, good to be mindful that we're approaching, two of the historically worst months for the market, given August and September, typically, lower performance, very volatile, pretty choppy trading. And, we could be in for some of that where we're kind of shaking out some of these worries that have, kind of cropped up because of the weaker economic data. But, that's what I'm seeing in the chart right now. Just a simple pullback, retraced back to, just below the middle Keltner channel. That's really where we're, settling right now in today's trading. Is the middle Keltner channel is splitting today's range. So we've really just allowed stocks to take a breather, pull back, cool off, which was certainly well needed after that run that we had coming out of April.
Yeah, no, all very kind of encouraging stuff. And I think we were talking about other things earlier, but you always wish stuff is graceful and beautiful, and it doesn't always work out like that. And it's not always how you got there, it's where you're at. So, knowing that the trend is intact is important. That's a really key element, because then it kind of gives you an idea of where to start diving in to look for the next trade. It lets you do it with a little bit of confidence, makes it easier to go ahead and pull that trigger, and you're not second guessing your actions. So uh, good to kind of line all that up. Always a great place to start with the high level view and then dive in deeper.
Exactly, exactly. So, one thing I want to talk about next here, John, is, with the sell-off that we saw last week, we had been noting this as well in our calls leading up to it, is that, we're really starting to see some really great signs of breadth, across the market. We're starting to see broader participation. Um, we saw a pretty significant deterioration of that last week. So I also want to, note that, discuss that here briefly. And, what we're looking at here now, everybody, is an S&P 500 equally weighted chart. So this is just the equal weighted S&P 500. So this is, a little more representative of how all of those 500 stocks, are trading, given that they're all weighted equally in this chart here. So you can see, of course, last week, a significant move lower, actually traded all the way down intraday on Friday to below the lower Keltner channel. So a pretty significant sell-off in the equal weight S&P. And that's just indicative of just the number of stocks in that index, in the S&P, that had, really started to rally, whether it was based on, hopes of a rate cut in September, or, the fact that the economy was still hanging in there really strong, jobs market was hanging in there. Several of those narratives kind of had some holes poked in them last week. And so also, did the narrative pushing those stocks higher. So we started to see some of those different sectors that had finally started to get some lift, finally participate. Some of the, more cyclical areas, some of the, the housings were starting to get a lift, in anticipation of a September cut, things like that. But kind of some of that air got let out of that balloon last week, and some of those weaker pockets of the market. And so that's just representative of what you see here, just with that sell-off. Of course, you're getting that bounce. Today it's a pretty broad bounce. As indicated by this index being up by about 1%. Again, it got pretty oversold, so it was certainly due for a bounce. But just wanted to note that I actually looked after the close on Friday, John, just to see. You're probably very familiar with the spider sector ETFs. Always like to look at those just to see, as a whole, out of all 11 spider sector ETFs, how many, what type of trend are the actual sectors in? Are they in a confirmed long-term uptrend, short-term uptrend? Are they in a downtrend? What's going on from the sector level, and kind of punch down from there. And so, I looked at that after the close on Friday, and of those 11 spider sector ETFs, 7 of them on Friday had actually breached to the downside, had breached their 50-day simple moving average. So, that is an indication of a failure of momentum and a failure of trend in the short term, that most of them were still trading above their 200-day moving average. So still in a long-term uptrend, but, having a pretty significant pullback. But seeing 7 of the 11 actually crack their short-term trend, and seeing that potentially reversing, that one kind of shied me away from looking at too many trades in those weaker sectors, because of course you want to be still a bull market. The long-term uptrend is still intact. We want to be targeting the areas with the strongest relative strength. So that leaves us with 4 sectors that we're still confirming long-term and medium-term uptrends. So that was, of course, you could probably guess the ones, but it was XLK, the tech sector; XLC, comm services sector; XLI, the industrial sector; and XLU, the utility sector. Those were the 4 that were still all performing and in a strong short-term, medium-term, and long-term uptrend. And I actually talked a lot about this in my Periscope newsletter too, John. I'm not sure if you happen to catch that,
Oh
but
yeah.
I kind of broke this down that, what that was signaling, is something that's kind of become very, very clear, in recent weeks, more particularly, as we've seen some of this chop happen, particularly last week's sell off, to see, what failed, what didn't, what's working, what's not. And all 4 of those sectors that are still working have at least some type of connection to the AI narrative. Whether it's helping to build out, whether it's deploying it, on a business to customer relationship, whatever it might be, they have some legitimate connection to the AI revolution. Those 4 sectors do right there. And that's why they're working. That's where, the part of the economy that is still just red hot right now, it's anything tied in to this AI revolution, AI build out. So that's why those 4 sectors, are still outperforming. And so with that, John, that's actually what led me to my trade idea for today. And it is actually one of those spider sector ETFs. It's one of the 4 I just mentioned. It's the comm services ETF. Some of the largest holdings in this, probably very familiar with them. It's Meta Platforms, Google, T-Mobile is in here. Of course, a lot of the telecom names, like the AT&Ts, Verizon. But the by and large, the largest holdings in here by far are Meta and Google. So that's kind of what this ETF is comprised of. It's still one that its trends are still intact, has good relative strength, compared to the markets, particularly of late, seeing that big pullback last week. But you can see here, John, still nice trend intact. Our 21-day EMA, is trading above our green line down here, our 63-day EMA. And the crossover, you can see when it happened back in early May. Of course, you can see the stock or the ETF price right here. It's just a touch below 108 per share, but it's very close to the middle Keltner channel. In fact, it actually opened near the middle Keltner channel today. Slightly higher off of those levels, but it's certainly still well within our Keltner channel buy zone. So it's trading below the upper Keltner channel. Still in that bullish trend. And also the RSI is confirming a good entry point down here as well, with the 5-day RSI being above 50 and rising. So that's a great indication that there is, building strength, building relative strength behind this ETF's move, but it's also below our level of 70 down here. So that's indicating again that XLC is not currently overbought at current price levels. So it's offering, a more attractive, lower risk trade entry opportunity. So With all that in mind, context of the markets, I still really like the trend here. I think this one is set to kind of break out of this, somewhat of a consolidation range it's been in over the past month, and likely setting up to break out to new highs, over the next couple of weeks. But with that in mind, I understand, we're heading into a more choppy period. That there's obviously been some new concerns introduced to the market, particularly after the jobs report. And so the trade actually found it looks like the price on this one has actually moved up just a bit. So I might have to adjust my strikes here. Um, but it's actually a call option debit spread for XLC. Let me see if I can find one. It's a little bit closer. It looks like it had risen up. I was looking at a 5 point debit spread though, John, and it was I was originally looking at this 98 and 103, but it looks like the price had moved up a little higher than where I would want to trade that one at.
Mhm.
So I'm actually going to adjust this one here on the fly just to get a little bit closer to where I'd like to be. Um, let's see here, because it looks like the time value had come out of these. You know what? I guess we're gonna have to stick with the September 19th option. Well, sometimes, hey, that happens in trading, John, right? The
Yep.
option prices move around, and that's all part of it. But I'm actually going to kind of change what I'm doing here. Still going to stick with the call option debit spread, but I'm going to tighten my spread in just a little bit and pivot into a more of an more aggressive type spread. Still having a little downside protection with it being a call option debit spread and in the money, but getting a little bit closer to the money, smaller spread. Um, just need to find some strikes here that are going to cooperate with what I'm looking for. Like I said, it looks like the time value had kind of gone out of this one unexpectedly here. Um,
Yeah, this is what it's all about. You go in, you look at something, and you got to be ready to react. You got to be ready to pivot, knowing what tools to go for, just like we're watching you do right here, to then kind of re-examine how do you adapt and how do you kind of, desperate, take the trade out of desperation, say, oh, well, I found it. I don't want to go back and, do anything. Tweak it a little bit
Exactly. Exactly.
and
Yeah. So
stay
you know what,
smart.
John? I'm looking at these. It doesn't look like there's really that much time value. It looks like that, there must have been a move in some of these option prices that changed that. The
Hmm.
spread I was looking at earlier, was right around the range I looked to enter. Had a pretty tight bid ask, but it looks like that's changed. So I may actually have to go ahead and pivot here and look at a directional call for this. So I'm going to go ahead and knock this one off right here. And I'm actually going to go ahead and just look at this option right here. So I would go ahead, in this case, if I had to look for a directional for this ETF, because again, I do think that XLC, does have a very high likelihood of continuing to trade higher from here, and
Hmm.
break out to some new highs. So I would be comfortable entering a directional position for this ETF. So I'd probably look at this 100 strike right here, and go ahead and look to just buy to open this 100 strike. You can see it's currently trading at 8.85. Go ahead and put that trade on. It's still pretty reasonable cost wise. It's just under $900 to put on one contract of that trade. And
And that's still the September expiration, right?
it is, yeah, still the September 19th expiration, and looking to just buy to open that 100 strike call right there. Again, it's coming in currently at 8.85 points.
Hmm.
So yep, that's what I'll look at for my trade today. Like I said,
Awesome.
sometimes the market throws you a bit of a curveball, John. I
Yeah.
had it all teed up, and I was like, man, looks like a great trade right there. They're gonna love this one today. And of course, I tab back over to the screen, and option prices had moved around on me. So, but hey,
Yeah.
that's
Well,
the market, right?
yeah, another really important thing that illustrates, we do these sessions. We got some folks in the room with us right now. We're glad you guys are here because this is how quick this stuff moves. And, we try to do our best to get this information out to everybody. It's tough to move as fast as the market, almost impossible. So, what we want to do is make sure that if we find something, people have the opportunity to jump in. And you can see here that if you're not in the room with us, we want to find great trades. We've been really lucky that even some of the trades that we found kind of head in the right direction. But the people in the room are definitely getting a bigger advantage. So we want to have you here. The other thing too is keep an eye on that Telegram channel. That really it opens up kind of more of a real time line of communication for us with you. and lets us kind of update everybody throughout the day as to what's going on, and give you a quick alert. You can just download the app and track us down there. We'll put the link in the email today to be able to do that. But highly recommend uh, following us on the Telegram channel as well, and being in the room. And right now, I know the folks that are here, if you've got questions, go ahead and shoot them up there, put them in the chat. We'd love to hear from you, want to know what you guys are looking for. And if there's anything that you want us to talk about or take a look at. So we always welcome everybody to do it. I know a lot of people will just kind of watch and listen quietly, but keep that in mind. If you're watching these, when you jump in the room, feel free to ping us, beat us up, question us, argue with us, tell us we're awesome, all of the above. Yeah, well, Blane, thanks so much for jumping in and doing this. Great to see, live action. I mean, this is the real world. Hopefully this shows everybody we're not making this stuff up. We're not trying to stage it or anything. This is kind of the way it
Yeah.
goes. So,
Yep.
uh, yeah, but awesome. Thanks again for the time on this. We'll be I'm hoping we're going to connect on Wednesday if all goes well, and we'll be able to kind of take a look at this and see what happened and see what else is going on in the market. So definitely join us again on Wednesday. Blaine, thank you very much.
Yep, absolutely. Thanks for having me here, John. Looking forward to Wednesday. And yep, we'll have to keep track of this trade and see how XLC performs. And you can hold my feet to the fire come Wednesday. See how it's working out.
Will do. All right, everyone. Take care.
Take care, everybody. See ya.